Folks, and welcome back to another edition of Money in Motion. Joined here with Monte. Some earnings coming through yesterday, or now through today, with AMD. Also had MicroStrategy, so can talk about that. Dollar continues to rip higher, with equities selling off a little bit here today. So Bitcoin down as well, but an interesting reversal and a lot to talk about. So excited to jump into things and much more. Monte, how you doing?
Doing all right. Yeah, lots to talk about today. It's already been an eventful morning. Like you said, AMD, they beat earnings on the top and bottom line, yet as we speak, their stock is falling hard, along with some other big names as well that we'll mention. But I really want to take a lot of time today to talk about Bitcoin and how two of the major indices that I like to look at in terms of like gauging risk on price action for Bitcoin, because it's pretty clear that, like, to me at least, and this is becoming quite the long introduction, but diving right
Just go
in,
right in. Just go
just
right
going
in.
right into the analysis. Like, to me, it seems like Bitcoin isn't showing any signs of independent strength, right? It's pretty clear that when the US equity markets are down, Bitcoin's down. But at the same time, we're seeing strength out of China. That's something that you had been highlighting earlier in the week. Strength out of China, the yin, the 3x bull shares, looking very strong. They had a brief pause yesterday, but continued their strength, and that definitely played a role in Bitcoin's price action, in my opinion. And I think we're seeing that play out like a battle between the East and the West. Because if you look at this Bitcoin chart, right, like what was the catalyst for this, other than the fact that we dipped below 29K, which, you know, we've kind of been talking about as a level at which we see a lot of people stepping in and buying. That's where we've seen it historically. It's also, if you extrapolate this level out, or not extrapolate, but take it all the way back to March. This was a critical level back then. This is clearly a critical level now, as well as when we dip below it, we actually saw some significant buy pressure. But also, what's worth mentioning is liquidations, because liquidations are certainly playing a role in what we're seeing here today for Bitcoin's price action. And if we just take a look at Bitcoin and the total amount of liquidations in the last 24 hours, $39 million worth of shorts liquidated, more than any other cryptocurrency, obviously. And that's pretty significant for a 24-hour period. And I think is the main reason why we're seeing such positive price action out of Bitcoin. But also, it's no coincidence that as soon as today's trading started for the US equity markets, Bitcoin started turning down. The DXY is ripping up. Look at this. Like, this looks like very bullish. And we finally have that inverse relationship back, CJ, that had been like kind of a crux of our analysis for a long time, where DXY up equals Bitcoin down and vice versa. And I think we're seeing it also with equities as well. This is not looking great. The S&P, we talked about, fund managers and, what they do if price broke into an all-time high. But, how about if we break below this critical 4,500 level here, this 4,520 level, and put in like a lower high. We talked about it at the beginning of the week, but this could plausibly be the beginning of, the end of what had been a positive uptrend all year, and the beginning of a more secular downtrend and bearish price action. But I would love to get your thoughts on all that and some more. So I will pass it over to you, my friend.
Yeah, I think it's probably a bit early to call it a secular downtrend, but
I'm bracing myself. I'm bracing.
yeah, that's good. It's always good to be prepared. Yeah, I mean, look, I'm not gonna say like I knew Nasdaq was going to correct or anything, or we were going to get a sell off, but like it seems like it was in the cards to a degree, in the sense that we've been up here. The Dow had like 13 days in a row where it won or just made money. So to see a little bit of profit taking is interesting this week, or just today in particular. But right now my plan, at least for like things like Russell 2000, I am kind of getting itchy trigger finger to bid that one once again, but I think I just have to wait till a little bit more of a bid comes in, and maybe we, can continue to play like the risk on breakout if it comes. But, been a decent past few weeks, really no real reason to give back a lot of capital on like a large equity position necessarily right now. I think the time's coming. Like, you look at things like, the crypto equities selling off today, like to see that, looking to accumulate those at lower levels, or if we start seeing bids coming in, but haven't really yet. I might as well just go and share this chart while I'm talking about it. But, just waiting at these lower levels of like 80, 85. MicroStrategy had earnings yesterday. Initially, they had a 2 or 3% jump. Actually, excuse me, I meant the opposite, a 2 or 3% sell off in after hours. And then, hadn't been much, but we're continuing that sell off. Looks very similar to Coinbase. So maybe these crypto equities have to give a little bit back, with the overall stock market. But ultimately, we'll see. I mean, we've kind of been talking about this as somewhat of a possibility. Like if we see like a 5 to 10% pullback in stocks, you get a lot of shorts that rejoin the party and then squeeze to potential new all-time highs. So that's a situation I'm kind of prepared for. The more difficult situation would be if we just melted up straight to all-time highs, which maybe it happens following today's price action. Maybe it doesn't. But yeah, any actions to take, Monte, today, or anything you're looking to trade? Because I'm pretty much sidelined for the rest of today. Can talk about some future setups later in the show, but I want to give you a shot to go over anything.
Yeah, there's just a few things I want to talk about briefly. First, I want to give a follow-up on AMD because it did have earnings after hours yesterday. And this is classic AMD. Beats earnings on top and bottom line and then puts in a candle like this. This thing is plummeting as I speak. It's at 111 on the nose. But, one thing I will say, so I had mentioned that I bought some spot AMD. I did exit this morning once things started to look ugly. But one thing I will say is that with AMD, you need to kind of be careful because this is something that's not atypical. Note this earnings report in May. It was very comparable to what we saw here in terms of numbers percentage. Nothing crazy, but it beat on top and bottom line, and we saw price fall substantially from $89 to about finish the day at $81. But then from there, it was essentially up only for 3 straight weeks. And I think that's actually a possibility for AMD. Now that this profit taking has occurred, it jumped up to almost 120 this morning. People got their chance to take the profit. But, I think the reality of it is right now, what's most affecting the price action of AMD is the fact that we're just in general incredibly risk off. I mean, the S&P looks pretty scarily bad. NASDAQ looks bad. And then of course you have the DXY, which looks strong. All those things painting a bearish picture. But to CJ's point, we had talked about how, like, it was funny because, last week we were talking about how if people get too bullish, we may see a squeeze and price fall back down. I think that's exactly what happened is people jumped the gun, got a little bit too bullish, and now are getting squeezed out of their positions. But the same thing can happen in the other direction, and I think it will. I think people are going to try and, those fund managers that we've been talking about that are desperately trying to maintain their jobs, they see formations like this and they say, okay, I need to short this. I need to make back all this missed opportunity here for my client.
There's nothing particularly special about these fund managers either. They may have gone to a better school. They may have, wear a more expensive suit to work in the morning every day, but that is no merit to whether or not they know how to trade.
Well said. Well said.
And I've seen these people. They're just, anyways.
Yeah, no. They're no smarter than anyone watching this show or you or I. They, in fact, because sometimes because of the strict limitations of the company that they work for or whatever, fund management company they work for, they're able to be less flexible and thus are locked into positions. And I think that's what happened to a lot of them. And if you look at what happened in all of 2023, we've basically been up only, but now they see this. I think we might see a lot of people try and rush in and short this market, get squeezed out, propelled to new all-time highs. That's when the flip or switch flips and people start to become bullish and finally start to inject actual capital into this market. And we see new genuine strength. But for now, it's like, it just seems like the same old story of calls at the top of the range getting crushed, and then puts are going to pile in at the bottom of the range and get crushed. And we're going to go back up. That's my estimate for, the rest of the week. So, yeah, but CJ, I know you got some particulars you'd like to get into. Feel free to dive into them now if you would like.
Yeah, I've got some trade setups for potential continued risk on or risk off price action that I think is interesting. Probably not going to do a whole lot throughout the rest of this week, but just really looking to bid Russell if it gets any type of strength. I think if you were to look at like COT positioning, an interesting pairs trade within the equities right now is like short Dow, long Russell. I don't really have the energy to put that trade on, but I think that's kind of an interesting hedge if you were to put those two like indices against one another. But I want to talk about energy actually. So going to crude first and foremost, a lot of people have been talking about this uptrend. I've seen a lot of posts on Twitter saying that like energy is primed. Love when I see something like that. But anyways, we're not at max short levels yet in terms of energy. Everybody seems to be getting quite bullish on it. We're at 16 in terms of the COT oscillator. Retail and large specs are getting very long. Not crazy levels, which they've been in the past, but on a relative level, they are very long given what we've seen in the recent uptrend. I don't know if I'd go at oil personally. Something that I think is more toppy at the current moment is heating oil. And I really love this counterintuitive price action where you have one of the hottest summers on record. Nevertheless, heating oil has been going straight up over the past few weeks. I love the counterintuitive price action there. But this one has been distributed from commercials. You can see tons of retail speculator longs getting into this and kind of chasing the uptrend. So, today's kind of been the first day of weakness as we kind of come up against, these previous support levels. Kind of looks like a miniature echo bubble to, the real boom bust cycle we saw in 22 within the energy space. So maybe that's an interesting place to start looking at potential shorts. Like I said, I'm not really that enthusiastic to jump into something today, but this has got a lot of crowded longs, and commercials have really been selling this thing over the past few weeks. So what do you make of that chart, Monte? I mean, it's pretty.
Are those Hikanashi candles or regular candles?
That's a good point. They're not Hikanashi candles.
Yeah, it's tough to buy it here, right? Because obviously it's been up only, and whenever you see that sort of.
Were you paying attention, dude? I'm talking about shorting it.
Oh yeah. No, I know. I'm just saying. I think there's going to be a lot of people that see this and say, okay, this thing has been up only in the face of a relatively resilient market, and they might try and enter long here, and I think that adds fuel to the potential for more plays to the downside. I think that that is, I wouldn't enter now because obviously it showed incredible relative strength in the market.
It's a setup.
If it pulls back like another maybe 1 or 2 days of negative price action. And I think you'll start to see a lot of people taking profit, because anything that has that sort of uptrend, there's people sitting in a ton of profit, right? There has to be. So the profit taking alone after a chart like that is enough to drive price down significantly and make money to the downside. So I think that because of the fact that today we're seeing kind of the first sign of weakness, we won't have any more longs entering. And if we start to pull back, then yeah, I do agree that that will be a really nice play, because not only do you have, one, people piling onto the short side, but two, when you have like, what was that, like nearly 2 months of just straight up positive price action, there's going to be a lot of profit taking, substantial profit taking, enough to pull back the stock significantly. So you have both those things working for you. And I think that, yeah, it is a nice setup. So thanks for sharing that one with us.
Yeah, I think the cool thing about COT as well is that, like, if I could just share a couple more setups. But
Yeah.
the point I wanted to make was that, even though the only indice that COT is saying like get short currently is Dow, which I'm not even really going to take that trade because, I like to see like, continuity within indices. Like I'd like to see more than one show like bearish positioning before I get in. And in 2008, COT didn't really give you a signal to get short stocks. But what it did do was, I think, tell you to get short oil or short energies or maybe long dollar. So you'll find these trades in other like risk off markets, even if, the obvious play of short stocks isn't necessarily the trade, because, we all know what oil did in 2008 and in 2020. And so, these energies are another place that you can kind of play. I want to talk about, or just show an example of like some of these commodities and how we've seen crowded long trades. I'm not saying that this uptrend can't continue. It certainly can. However, something that's been kind of interesting that happened yesterday, or not yesterday, but earlier this week, is like soybean oil. This was a tremendous short squeeze and, a very powerful uptrend that we had ever since basically June. Similar to what we've seen in heating oil in terms of that like ferocity of the uptrend. But then in one day or just a couple days, once we start seeing these bearish price action, all of these longs are just trapped up here. And you can see that in the positioning, very similar to how heating oil's current positioning is. So, if the squeeze comes like here and you get a, 4%, 5% down day between these 2 days, then, that's a good opportunity to capture the losses of those long traders in heating oil. I don't know if today is the day per se, but if we get some type of squeeze or downtrend, a lot of those people are going to be forced to cover, thus creating opportunity for kind of the inverse perspective in my mind. So that's how I'm thinking about energies. And that's really the basically. Oh yeah, last thing.
Yeah, I noticed this. I was going to say, he's not going to mention this OJ chart.
Speaking of going up only, yeah. I think this is a good lesson, though. I've probably made this rant before, but I think it's worth reiterating.
You've definitely made this rant before, but go ahead.
Yeah, Monty's like, all right, time for number 11. But yeah, everybody, including myself, it actually was a short back here. So like this short was valid. But, anyone who was still trying to short it throughout here when it was consolidating, once it got to crowded long and you had a lot, like, still look at how many longs there were back then in comparison to like how there are now. Still a lot, but not as much in terms of previously. Anyways, everybody wanted to short this. However, commercials were covering and they were actually getting longer. And so even though the contrarian play in terms of what people might think, buy low and sell high isn't necessarily contrarian. What contrarian trading to me is all about is the positioning. So you had, just like an altcoin, just like banned protocol or something, if we were looking at this and it was a cryptocurrency, we would have seen the funding rate going, insane. But since we don't have funding rates here, we just have COT data. We can see that the asset is massively crowded to the long side, That's why it keeps squeezing up people trying to short it. Now, however, we've gotten to a point where it looks like the shorts have somewhat given up. At least that's what the data would kind of conclude in the short term. So maybe we see a little bit of mean reversion or, like weakness finally. But I just think that this, even if you're trading it or you're just watching it, it's a great example of how contrarian trading is not about price action. It's about positioning.
100%. Well said. One last thing I do want to share that I forgot that I wanted to mention was just briefly the Bitcoin dominance weekly chart. I think this is a relatively interesting chart, just from the perspective of like look at this large cap altcoins. I mean, they're absolutely getting hammered today. And again, this goes back to my point about kind of the West versus the East, because Bitcoin dominance having a good week, having a good day in particular today. As you can see, it's actually even outperforming ETH, which is something that it hasn't really been doing lately. We've actually been seeing these two remain kind of somewhat in parity, which is evident if you look at the BTC ETH pair. But I want to talk about the HSI real quick, because this chart I think is going to be very important to watch in terms of what we see for Bitcoin in the coming days to weeks here. If we don't get strength out of either the HSI or the S&P, which neither chart looks particularly good right now, and both looks set for at least an interim pullback, I think that spells potentially 27.5, or worst case scenario 25K for Bitcoin. Now, I'm not saying go out there and short Bitcoin. I'd never recommend that. I don't short Bitcoin. There's always better opportunities, hence the point of me showing you the Bitcoin dominance chart at the beginning of this. But if you were to short anything, right, I think it would be look at some of the coins that have done the biggest multiples in the last month. Bitcoin hasn't done that. Bitcoin's been just lingering around this range. There's a lot of alts that could plausibly pull back, particularly in the OG DeFi sector. So you have things like Uniswap, you have things like Aave, you have things like SushiSwap, all looking, relatively weak and set for a pullback. Bitcoin Cash pumped hard. If it breaks down below this level of 232, and the thing is as well, I checked this morning, the funding rate is relatively neutral. This is just something that you don't often see, right? So this is genuine weakness. This isn't just people trying to short an altcoin that had gone up significantly. We're seeing genuine weakness today, and I think that's evident from the S&P and the HSI, showing that right now is a time to be risk off, especially when you consider, the dollar looks great. It's pumping. You don't want to be in risk assets right now. And what's more risky than Bitcoin Cash? Probably nothing.
I've actually got something to rival that in terms of risky. What did you say? Not much else more risky than. Hold on, let me bring up. This is just. I had to put this in the show just because of how funny it is, and I didn't realize this was actually going on. Monte, did they send you one of these? Did you get this in your mail?
I didn't. I don't check my mail that often, to be honest. But no, I did not get that. What the hell is that?
It's an advertisement to buy Hex that was mail ordered to probably tens, if not hundreds of thousands of people during the height of Hex.
That chart looks good.
Yeah, it looks it's outperforming, right? So, yeah. If anybody ever, that's just, it's targeting a specific type of demographic, which is like,
don't say it. My friend might be watching. The one that bought Hex. I'm just
Okay.
kidding. He's not
All right.
watching. Go ahead.
I'm just saying, like, the type of demographic they've targeted is very low-hanging fruit, I think, for the SEC to go. It's also low-hanging fruit for them, but for the SEC, it's extremely low-hanging fruit because it's like just such an obvious predatory mail order scam. But I just thought it was funny that they had the audacity to literally mail people.
That's like mail order scams have existed for like, hundreds of years now. And it's funny that Hex, a cryptocurrency, is using mail order as a means to scam people. Like, were they like that is crazy. But I think that's a good place to end it. Looks like we're set for a pretty interesting day. Risk off, so be careful and look out below. But if you guys would like to join CJ and I, of course, you can always do so for free for 14 days at tradethechain.com. We have a community member Discord with members from all around the world. They share their insights as well. You definitely want to try it at least for 14 days. You can check it out for free. If you don't like it, then you can go ahead and cancel. But definitely want to check that out. And also, of course, you get access to the Trade the Chain dashboard where you can see the sentiment of the tokens. You can see tweet volume. You can see regular volume. You can see what's hot and what's not. So definitely check that out. And of course, as always, please like and subscribe. Really helps out our channel and our videos reach more people. So we would really appreciate it. But CJ, that's all I got. Any parting words for our audience today?
Yeah, for our members, we got our AMA today around noon Central Time, if I'm not mistaken, somewhere around there. You'll get
something like that.
But regardless, hope to see you guys there. Thanks for watching, and we'll see you next time.